I want to welcome in Jonathan Corpina, Senior Managing Partner, Meridian Equity Partners. Jonathan, it is great to sit down with you this morning. Let's start out with the correction and where we are in terms of the market action this week. There were a lot of analysts who were calling for a correction this year. Is this kind of just a normal garden variety correction, or is the nature of it different from your point of view?
Right, so let's kind of back up a little bit.
Got it.
Yeah, analysts were calling for some change, some correction, some momentum shift in this market. We can discuss or we could debate the fact that we probably were at levels that we shouldn't have been at, right? Leading up to the election, and we're getting information now, the Biden administration pumping in, a ton of money into our markets to help with the elections. That's normal and that happens. But the run-up that we had prior to the election and then the run-up after the election, we could probably say that was somewhat inflated. So this pullback is something that we're looking for. What's interesting to see is that this pullback is happening rather quickly, although it feels somewhat measured. It's not panic selling. It's not a massive influx, but it's quite similar to the pullback that we had back in
2020.
And the end of July and beginning of August. We had a nice little pullback there where we had some international exposure of a Chinese bank. So we're starting to see like this same kind of correlation to that. I think what it tells us is that although our markets have performed well and overall our economy has done well, our markets are very fragile, right? And any type of headline that could spook and scare this market, we're starting to see serious profit taking coming off the table. So in this period of time, I think it is warranted of what we're seeing. I think the activity and the kind of getting our market back to the place where it probably should be is warranted. It's just a question of how long does this last and what's the next headline that's going to help us, right? So we're talking about the Fed, we're talking about tariffs.
Right.
It seems like the negotiations and tariffs, that pendulum is swinging very far. We've got the Trump administration coming out hot and heavy in negotiation tactics, and now we're starting to see little by little, the parties coming back to the table. We'll get some sort of resolution with Canada. We'll get some sort of resolution with Mexico. I believe we'll get some sort of resolution with Ukraine. So the dust will settle, but it's going to take us a little time to get there.
Okay, the dust will settle, but it does seem like the president, there was all this talk about, this is a negotiating tactic, and it seemed like the expectation wasn't going to be as hard as it was. And kind of the hammer. And then April 2nd is coming up. That's another tariff deadline that's in front of us. That's essentially like 2 weeks away. And from the president's recent rhetoric, it seems like that will be a hard line again. And I don't know. I know tariffs were a hallmark of the first Trump administration. Now in Trump 2.0, they're again a hallmark, but they came quicker than anybody expected. We thought it was going to be the tax policy that it would start with. So is it all headline risk now that affects the market movement versus macro data points like got CPI this week that was cooler than expected? Initially, you saw a bounce off that, then a fade.
Right.
And it seems like that doesn't matter anymore.
Yeah, I think we kind of sometimes look at it all together, and we have to separate it, right? We've got the Trump administration flexing their muscles with tariffs. I think it's fair to say President Trump doesn't like when he gets pushed back, so then he doubles down and pushes back harder.
That's fair.
But I do think in time we will get to some area that'll be helpful there.
Okay.
The other side to it of talking about interest rates in our economy, we've clearly seen over time inflation. We've seen interest rates go up. We can once again debate that where they were at 2% might have not been a favorable position for us to be at. We're going to have to find some happy medium there. The Fed acts independent. They're apolitical. Yes, they look at all the economic data. They look at geopolitical risks. They're not going to be influenced by the White House. But these are
But they have to respond, though, because, whenever we have those press conferences where they ask the Fed chair questions about policy from the White House, he always tries to dance and not directly answer that. But they do have to respond to it.
They do. And the response is the right response. But one thing that we do have to keep in mind that it took a very long time for us to get from interest rates from the low point to the high point. The expectation coming into this new administration was January 20th, things are going to get fixed the next day. It doesn't work like that. It doesn't happen like that. So I think there's like this false anticipation that egg prices are going to come down immediately because we have a new president. It doesn't matter who that is. And I think the expectations of getting interest rates down quickly is not a true expectation. So there's going to be a very strict step lock measure here of getting our economy back into a fine area where everyone feels comfortable with. But then you throw on tariff negotiations or geopolitical risks that continue to be out there. All of this mixes together, adds this somewhat negative sentiment to our markets. It's healthy for our markets to move up and down. I don't particularly like when they move that quickly, right? But there's a lot of uncertainty now. We've had back-to-back years of double-digit returns in the market. If you take a step back and look at a very long-term chart,
that's not,
these are little blips that we're going to see. So I think people need to take a deep breath. Understand that we are going to get through this. It's going to take time. The outcome might not be what everybody wants, but the market always finds its price. Stocks always find their price. They always come back to the area where they should be.
All right, Jonathan, thank you.
Thank you.
That's Jonathan Corpina, Meridian Equity Partners. Thanks so much.